video. Hello everybody. This video is going on both of my channels, David D. Smith, which is my personal channel where I talk about business, investments, life, all that wonderful stuff. Talk about that stuff over there. And also my music channel, DDS825. This video is going to be a little bit different. This video is of a session. It's a screen recording of a session that I did on IG Live with someone by the name of Steph's Wallet. I will put a link to her Instagram in the links below. So you guys be sure to check her out. She's very knowledgeable in the world of finance and things of that nature. We came together to really just put some information out there about the stock market. I buy and hold when I get involved with stocks. When I invest, I'm not day trading, not really swing trading. It's when I'm investing, I'm really investing for some years. That's the long-term plan for me right there. Is I just do it long-term. So I go into why I do it, how I do it. It's pretty much breaking down the basics of the stock market and how I got involved in it and how you guys can get involved with it, how it can help you. And then at the end of it, Steph breaks down a once a month live investor call. We're going to set it up to where we do it kind of like how we did it over IG Live. It's like a web chat and you guys will be able to go check it out later. But the thing is, you have to join the group. To join the group, it will be $25 a month. And like I said, we go in once a month, talk about the stock market, break down different things to give you guys the basic information on how to get started. And she's going to talk more about that in the IG Live video towards the end. So please be sure, if you're interested in stocks, just play the video to the end. You will be able to hear some great information on how to get started, because I know I get a lot of comments and questions about how to get started. So you guys will be able to get that. And then as well, you will get information on other things, and then you'll find out about the group that we're doing with the monthly call. So if you guys are interested in joining the wait list for the monthly call, I'm going to put a link in the description for that as well, so you guys could go ahead and sign up there. Just leave your information. You don't have to pay right away, but you're just signing up, and you will get an email soon once we get everything sorted and ready to go. So without further ado, I hope you guys really do enjoy this video. I'm really passionate about giving this knowledge away because it is a way to build wealth, which is very, very, very important. So I go over all type of stuff in this session, so hopefully you guys enjoy it. Let me know what your favorite part was, and if you have any questions about the stock market or anything like that that you would like to have answered, drop them in the comments below. And if you're watching this on my music channel, I appreciate y'all tuning in, because this is very different for this channel, and I'm gonna have more of these coming soon. And if you're on my personal channel, thank you for watching as usual. I appreciate all you guys. Let me know what you guys think in the comments below. And if you know someone that's interested in starting in the stock market, share this video with them so that way they can just get the basic information. And if you are interested in signing up for Robinhood, you will get a free share of stock. I will get a free share of stock if you click the link in the description below. I'm also going to have a link to Acorns, which is a site that you can go ahead and start investing very passively with roundups and things of that nature, small increments. I was putting in $5 a week at one point, and that went up so much based off of the $5 a week. And then once you added in that roundups, once you add those together, it went up very quickly. So without further ado, hopefully you guys enjoyed this video. Let me know what you think in the comments below. And my phone's ringing, so let me know what y'all think in the comments below. I appreciate y'all. Have a wonderful day. Take care.
Everybody, good morning. Good morning. I'm going to give everybody a chance to join. How are y'all feeling this morning? Abby, what's up? I'm about to talk to you in a few minutes. Hello, hello, hello. Good morning, everybody. And we are about to get started. I'm so excited about our session this morning. David is about to send a request to join. Oh, Redhead, how are you? It's so good to see you. It's been forever. Back in them Howard days, the homie. Hi, everybody. Okay, so we got a lot of people joining. Good to see you. David, what's
Good morning.
up? Good
Up
morning.
here, setting up this screen recording.
Awesome. I'm seeing some of my people from Howard who have joined, some of my friends from Houston who have joined. Hi, Rosalind. Hi. Okay, so Prince, I see you joined. Hey, everybody. Good morning. Good morning. I think some of your people are on here too, David.
Let me see. I don't know if I can see who all in here. But
Yeah.
hello, everybody. Thank y'all for tuning in.
Good morning.
I lost
So,
my tripod where I could have set my phone up. Let me see if this works.
okay.
Okay, that'll work.
Awesome. Redhead is into music too, so y'all should probably connect after this. I'm just looking at the
Okay.
list of people who have joined. Hi everybody. Hey. Okay, so I'm gonna go ahead and get us started. So for those of you who don't know, my name is Stephanie Houston. You are joining this live, which is a part of a series that I'm starting called Money Talk. So all throughout 2020, I'm going to be talking to interesting folks who have interesting things to say about money, whether it's about their personal investing, whether it's about businesses they've started, whether it's about just some crazy way that they've been able to budget and save money and pay off debt. I'm talking to those people because there are some conversations that need to be had around money in our community that just aren't being had. And so that's what my mission is to do. So all throughout this year, I will be talking to folks about money. And so I was connected with David through Instagram, through social media, and found out that he produces music and he has this whole creative side that he has been able to monetize and reach success through. But he also is into investing. And he's also making his money work for him. So he doesn't have to be in the studio making beats to make money. So I thought that was so dope. So I wanted to talk to him about what he's done and how he got to where he is, and allow that information to be passed on to you so that you can understand that even if you don't have a degree in finance and have 10 years of investing under your belt, you too can get started. So I'd like to share the story of how David got started. So David, please introduce yourself and let us know what you're about.
All right, my name is David Smith, also known as DDS or DDS 825. Those two are kind of the same. It's just with DDS, that was more of my professional name with music.
Okay.
So I'm a music producer. I produced Try Me for Dej Loaf, a few other songs for her, songs with other people. Just this week, I had a song come out with I Swear Bezo, who's an artist out of Detroit, and Dej Loaf. I have some more tracks coming out over the next few months. But I got started investing simply because people always will say there's no retirement plan when you're doing stuff like that. And then what you're going to be doing when you're 60 years old? Are you still going to be trying to chase down rappers and sell beats? And then I thought about it and I'm like, that's really a good point. And then every time I would hear people with money or that are wealthy or doing things that they just doing whatever in life, it was always, oh, my investments, my investments. It's like, what's your
Mm-hmm.
investments? Real
Mm-hmm.
estate, stocks, bonds, all
Mm-hmm.
type of stuff. And I'm like, okay. So I started asking my people about stocks, like how do you get started with it and things of that nature. And it
Mm-hmm.
was always something to the effect of, you're going to lose your money. Don't do it. Don't do it. Just put it in a savings account. Just put it in a savings account. And I have my own personal experience where I had a lot of money in the savings account and the interest on it was like maybe $1 or something crazy like that,
I've
something
had
so small.
thousands, 10,000 more in an account, and at the end of the year, they show you a statement. They're like, "You earned $1.02
Right,
in interest," and it's like,
exactly.
"Wait, hold up, what part of the game is that? I'm losing money
Right,
having it sit here."
exactly.
Absolutely.
So it just became a point in time where I wanted to really learn about it. And I actually had one teacher who I'm friends with on Facebook. He just sent me a link to Investopedia. And I was
Okay.
like, let me check this out. And he was like, they have a simulator. I went in there, put the little fake money in there, and I saw how much money I made over 3 months. And I'm like, why am I not doing this with my real money? So
Hmm.
that's pretty much how I got started right there.
Okay, so you got started from hearing. So you reached out to different people, asking them, "What are you doing? How are you investing?" And you got a lot of people saying, or detractors. But then you happened to have one person who put you on and gave you the research tool that you needed.
Well, that didn't even come from me asking him. I just put it up on Facebook like I'm going to learn the stock market or something like that. Going to go buy some books and things of that nature. And he was just like, go here and try this. But I was just saying in general, like you have family, you may have some friends, or you just hear people always referred back to like when the stock market and stuff crashed in 2008. They're like, people was killing themselves over that and everything. And
That's
I'm like,
true.
but still, I'm not gonna put all of my money into it, so I shouldn't have to worry about that. I'm gonna put in what I could lose to start out, just to see, to get my
Absolutely.
feet wet, learn the lands.
Okay, and I see Stephen Redhead was just mentioning he's also in music, and he's saying he's been buying stocks over the past few years, and he's still learning. That's what it's about. And 9 to 5 says, "I remember you showed me TGAT app." So getting started is like the first thing, just actually saying, "Hey, this is something that I can do." Taking that first step to just say, "I can do this," is really important. So what you did with going through Investopedia and using the fake money to get started,
Hmm.
I think that's super dope that you did that, because sometimes people just really get overwhelmed by the idea of investing, because you think You got to have slick back hair, be a wolf of Wall
Right.
Street. You got to have millions in your
Oh,
account.
but hang on, that was another movie that inspired me with that
It
because
inspired
I
you?
remember seeing that movie. I randomly went to see it and I was like, there's actual money in the stock market, even though what they did was wrong. But
Right.
the way that they were making money with it, I'm like, oh wow, there's a so just and even when you turn on like the news, it's always stock news all the time. And it's like,
But it's
well, what is
almost
this
like
about?
white noise in the background that you don't necessarily, it doesn't seem like it necessarily is for you. So if you're not in tune in that way, then you can hear it, but it's just background noise until
Yep.
you actually have skin in the game or until you change your mindset and realize I could be an investor. I don't have to just be a consumer. And so like specific that statement right there is something that I took on when I was in college because I was just like, you know, being a consumer, going and spending my money at Target. I put up something last week talking about Target specifically because they had a tweet that they put out saying, oh, self-care, you deserve this. Buy something from Target. Buy a cart full of stuff from Target. Okay, cool. But what about buying Target? You know, there's a running joke with these suburban moms who just, you come into Target for one thing and suddenly you've got 20 items. Yeah, you don't need them, number one. And number
Right.
two, if you took that same money and bought Target stock, you know, it would have gone up by 66% in the last 5 years. But the paper towels and random dishes and, you know, and the pillows and the throws that you bought
Yep.
from Target, they're not going up no 66% in value in a year, so, or in 5 years. So that's just one of those things. So we've already kind of touched on this about the first question I have for you, which is why should you invest? And I think the point that you made about there being no retirement plan for, you know, people in your industry, I think that's solid. But for some of the other folks on this chat or who are listening to us, why should they invest? Why should they get started and risk their money?
Shouldn't invest because you're risking your money leaving it in a savings account or anything like that. All the extra money that you have or that you spend on things that you don't need could be getting put to work for you. Like I will always hear people say, put your money to work for you. And I wouldn't necessarily, I guess I understood it, but I didn't really understand it until I actually looked at the stocks where I see the growth over however long I might have invested 2,000 in this stock. And then it became 3 or 4,000. Now that's literally by me just setting my money there. I'm not doing anything else. So when you're not investing, you're missing out because we deal with inflation. Like I went to McDonald's recently just for a drink, and the drink cost so much. And I believe I could be 100% wrong when I say this, but I think I saw a chicken nugget meal was like $9, and that blew my mind. I could be wrong. It might have been something like 8 or 7 somewhere, but the fact that it costs that much, I'd be better off going somewhere else if I wanted some chicken nuggets to an
Right. And
actual
I
restaurant.
remember when I was little going to Albertsons or Randall's, you used to be able to get a Snicker for like, I want to say like 25 cents if it was on sale and 50 cents if it was regular. But now stuff be like $1. And I know that the Snickers are smaller than they were like before.
Same
The
thing with the
size,
bag of
like a
chips.
20 ounce was like, you know, 50 cents or $1. And now it's like, you know, whatever, $1.30, $1.50, whatever. Like
Yep.
prices are changing. So for those of you who don't know what inflation is, that's what inflation is. Your dollar being worth less now than it was 5 years ago. So if you could buy, give me something that you know the price of, like the little Lay's things of chips.
I was just about to say they used to be 25 cents and now they're a
25
dollar.
cents. They were
Yep.
25 cents. And now how much are they?
Like a dollar.
That's inflation. Your dollar does
Yeah.
not get you what it used to do before. So if your dollar only buys you 50 cents worth of product now, then that means when you're sitting your money in a savings account and you have 10 grand in there and you only get $1 in interest, that means the 10 grand that you set in there now is only going to buy you 9 grand worth of stuff and you earned $1 in interest. So that's what I mean when I say you are losing money by putting it in a savings account, because it literally is just sitting there. It's sitting there and it's losing value. So the money that you put in is not even worth what it was when you first put it in there, but you're not earning any substantial amount of interest. So that means you are losing money by letting it sit. So just as David mentioned, putting your money to work for you means, okay, this 10,000 that I have right here that I'm able to invest, I'm going to go put it in these stocks. I'm going to buy this thing and that thing. And this 10,000 will be worth 12,000 later on. So that's the opposite of inflation. Your money is growing as opposed to losing value.
Yep, 100%. Even I just try to explain that to people all the time. So I'm like, there's so much stuff you can stop doing, and then you can put that money into something that's actually going to be worth something.
Mm-hmm. And it gives you nothing. Like Abby just said, it's giving you nothing in return. And what, this is a whole side tangent, but I took a class on commercial banking when I was in college. And what they do is they collect and gather all the money that you have sitting in the account, and they go invest it in the market. You know, they're going to invest in something that's really low risk, but they go and invest your money, and they make money off of it. And then they give you they just drop you a little quarter. I'm saying quarter. If you have $1 million, they'll drop you a quarter. But, you know, they'll drop you a little half a penny while they are making serious returns on the money that you are depositing. So it's like, it doesn't even make sense. I'm not saying that everybody should just go wipe out their savings account and just go crazy in the market. But I am saying that it just doesn't make sense not to have at least something invested in the market.
I always say put a percentage of something towards it, because even if it's just a small fraction, because you're going to need money at some point. Life happens. So you don't want to have to go pull that and stop the growth that could happen. But I say like just minimize the stuff that's not necessary. Like stay at home, cook at home, all that stuff. Save you a ton of money.
In 1951 is saying why you get 0.025% annually. And that's no joke. Like, I'm not exaggerating about having 10 grand in seed.
Real.
I don't even know if I really had $1 in interest by the time the year was over. It was definitely under $2. It was change. It was chump change, and it makes no sense. So you answered the first question about like why you should invest. So in order to have a backup plan and in order to put your money to work and ward off inflation, you know, losing value in your dollar. But beyond that, like, okay, so I want to get started. What you're saying makes sense. How do I start if I am working a 9-to-5? If I am working for every dollar that comes my way? How do I get started? I'm not a millionaire, as far as you know, but I'm not a millionaire. So how do I get started?
The first step to getting started is simple. Get started. Find a brokerage that you're comfortable with, or before you even do that, I would just say figure out your why as to why you want to invest. So that way you'll stay consistent and go through the work, because it's not really work, but some people may stop halfway through the whole, you know, oh, I got to sign up for this. Oh, I got to get them this. I got to do that, and then just not do it. So figure out your reason for doing it.
The idea of filling in the forms and putting in their social security number and all of that.
Yeah, I was just about to say that they were my social security number.
Like, oh, why do you want my social? Because you're going to get taxed. But people just like, and some people definitely do stop halfway through even the signing up process.
Definitely. And then what somebody mentioned in the comments, I would definitely say read up on it. Or if you're not a reader, watch videos. There's tons of people on YouTube that talks about stocks. That's how I got started. One of the people that I actually, Dr. Boyce Watkins had a video that said how to buy stocks or buy your first share of stock. And I just watched that video, and that right there, I was like, oh, it's that easy. It's like buying something just ordering something online. It's that simple. So at that point, I had no reason not to. So I made the account, and then I went and picked up some books. My fiance, she had me go to Barnes and Nobles with her, and we were in the business section. I said, you know what? I'm going to buy every book that looked interesting on the stock market. And that's where I went and picked up Stock Market 101 and Investing 101 and Rich Dad, Poor Dad. And that's a good one to read because it will help you get your mindset going for investing.
What it is. It's a mindset thing more than almost anything, a mindset thing. Exactly.
Yep. And then I see somebody else mention Investopedia.
Yes.
Yep, that's a good place to go.
Girl. If you're ready to sit at my feet, I'm ready to give knowledge. I'm looking at some of the comments. So yes, Marissa, I hear you. Yes, redhead, my eyebrow game is very strong. Thank you for noticing. And yeah, no, absolutely. Some of the things that people are saying, Abby are doing as well, doing the reading and getting started by just exactly what you said. Going to Barnes and Nobles, going to half price books or the library if you're really about that life. Yeah. And then additionally, there are so many resources from YouTube to Investopedia to Yahoo Finance, all of these different ways that you can get information for the low or for free just to get started. So there's a ton of ways. But then I think the other thing people keep getting stuck or hung up about is just the concept of a bunch of money. You have to have a bunch of money. How much did you spend on your first investment when you bought your first share of whatever? Do you remember?
I'm trying to think of what I bought first. The first thing I bought.
Money bags over here, like, I mean, I own half of
been...
America. It's hard. The first purchase I made in my dynasty.
I think the first company I might have bought might have been Disney, and at that time I think they're around 120 or something like that. Not 100% sure. It was either Disney or Shopify. I know it was one of those two,
Ooh,
and it might have been
Shopify.
Shopify just because it was low at the time. It was like $50 or something like that.
Mm.
So
Okay, so
one of those two were the
Shopify,
first
for
ones.
those of you who don't know, the ticker is SHOP for Shopify. If you go put in SHOP and then stock price on Google, you will see where Shopify is trading right now, the price it is trading at. And then you will know that David is in fact money bags. So yes, that was a great trade. So to get Shopify under 50, and right now Shopify is over 400, that's what I mean. Starting small. If you have $50, some of you all spent $50 this week eating out, period.
Yeah.
Most of you probably spent
Easy.
more than $50 this week eating out. No cap. I used to spend, when I did the numbers, I was spending $50 a day. When I was living in New York, before I did my first budget, I realized I was spending like $10 in the morning on a coffee and a bacon, egg, and cheese from the little bodega joint. And then I was going for a snack, and then I would go for lunch, and then I would have dinner, and then I would go after dinner, and like just so much money I was spending. I was spending in excess of $200 a week on eating out. And didn't, at that point, wasn't really investing very much, but spending $200 a week on eating out, but didn't think I could afford a portfolio. Excuse me, didn't think I could afford a stock portfolio.
I pulled it up and I first bought Shopify on February 8th, 2017 for $53.10 a
Woo!
share. So that was literally like 2 days after I opened my account. So that was probably my first share. But I probably bought Disney on TD Ameritrade. I'm looking at Robinhood. But
Okay.
yeah. So as you said, the growth on there at 460 something dollars right now is crazy.
And just to be clear, everybody, David bought Shopify for $53, and it is now at 460 some dollars. Like, and all he had to do was wait.
Yeah.
And the other thing, so I'll share what my first stock was that I bought. I bought one share of Starbucks. One share. One share. It was $19 and change at the time when I bought it back in 2008. I was a college student. I didn't know much about investing, but I was working on Wall Street. I was working at JP Morgan and didn't even have my own brokerage account. So I was like, this is kind of like fraud that I'm out here teaching or showing other people how to make money and going to clients like, oh, yes, I can build your portfolio. Meanwhile, I own not one share of nothing. And so I opened an account and just bought my one share of Starbucks because that's what I had to spend. And I'm looking around and be like, okay, well, I don't know what to buy, but I do know that I love to go hang out at Starbucks. So Starbucks it is. Starbucks is at $90 right now, just from sitting and holding. But like, can you explain the reason why you bought Shopify? Because I think we're both kind of on the same page with why we bought what we bought. And that can help some other people understand that it's not super complicated. But why did you buy Shopify?
I bought Shopify because as somebody that's in the digital space as an entrepreneur, selling things, selling merch, things of that nature, I knew it gave people a platform to sell their merch and they make a lot of money off of it. So this is going to be something that's around for a long time. I looked them up, read different articles. I actually think the first thought came to me because an article popped up on Facebook or something like that. And I was like, let me go read about this. And I was reading up on it. I'm like, okay, they say you should buy it. It'll be like buying Amazon back in whatever year. And I'm like, I don't really know too much about the investing stuff. And I'm like, it's $50. And I gave myself like a budget. I was like, $2,500 is what I'm going to start investing with. So I'm like, $50, that ain't going to hurt.
Right.
And from there, since I was familiar with them, it made sense. So I'm like, okay, I'll do that. And then it says on the 9th, I bought 3 more shares. So I just kept building up to it. And then from like in general, I pick stocks that I know about, believe in, things of that nature. Like Netflix is one that I go back and forth with people about because they're like, well, they're not making any money. But I'm like, but you watch Netflix, right? They have all this other stuff. I don't know what I don't know what their long-term play is, but I got in to where I think I bought it around $140 and it's over 300 and something now. So I'm like, they would have to have a significant drop for me to go and sell all of that. So it's really just, I look around my house, like I have an Apple Watch, Apple Pencil right here on an Apple phone, iPad right here, Beats headphones. So it's like, why not be invested in the company? I'm in the ecosystem already. So why not
Yes,
be
yes,
in the company?
yes. That's the reason I bought Starbucks, because I was already a consumer and I could see that it was a popular product. And the reason you bought Shopify, because you're already in that space and you see that it's used. The best investment, the best return I ever made was on Square stock. I bought Square because I was a consumer. I used it when I had my own business, and I got in when they had their IPO at $9. And by the time I sold my shares, it was at 100. So it's literally like, it doesn't have to be as complicated as doing hours of research and you've
Right.
got 6 different screens up and you're typing furiously trying to follow the charts and graphs. You can just look around and be like, what do I use? If I go to
Yeah.
Target 3 times a week, if I order off of Amazon 5 times a month, if I use Shopify for my business, if I use Square for my business, if I'm wearing Nike shoes, if I
Yeah.
am looking at a Microsoft computer, like, that sort of thing. Look around you, and it's just as simple as looking around you, which goes into my next question. How easy has this been for you? Has it been hard to manage all of your investments? Like, do you consider investing to be something that's been difficult?
I don't consider it difficult at all. Actually, when I look at what I've done and people ask me questions and stuff, it's kind of weird for me because I'm like, this is so it's so passive to me. It's just like I just invest in it. I watch the stuff. I check the portfolios,
Mm-hmm.
things of that nature, but I'm not actively trading. Like the people with the multiple screens and stuff like that, they're probably day traders or something like that, where they're just like, oh, we need to be on it all the time. Can't miss 1 second. For me, it's more so I'm with going the ups and downs unless it's like a significant drop. I bought a share of a company that went down. That was like my dumbest trade. But we can get on that later. But other than that, it was just like I just sit back and I check the money's working for itself. If you see news about a company that you feel uncomfortable about and you want to pull out at that point, then that's on you. But for me, even when the stuff go down, like when Trump first got in office, it was a thing where, oh, the markets are going to crash and stuff. And it seemed like they took off since he got in there.
They really
So it's like
have. They really
I
have.
just
I'm not
sit
trying to
back.
big up the dude, but they really have.
It's going crazy. So it's like I just sit back. I just be reasonable with it. Disney's coming out with Disney Plus. Okay, let me try and get a few more shares of Disney before this happens. Apple's coming out with this new product. Well, let me try and get a few more before that happens. And just sit back and watch it grow over time.
Yeah, and I think
But
that
I
point you
check my
just made about
portfolio every
Disney,
day though.
you do or you don't?
I do for them. Like
Okay.
it's not. Let me check the stocks. I literally just check in to see how much it grew throughout the day because I just like to know if it. Oh,
Mm-hmm.
I lost $100 today. Oh, okay. Well, the next day I might make $400. Stuff like that.
Mm-hmm. Yeah, I mean, I think that what you just said about Disney just made me remember that after Frozen came out, Frozen 2, the Disney stock went up. And then every time something happens like that in the news, there's always an angle that you can trade. And it's not something to where you have to be beholden to it where you're always at your computer. But if you hear something and you think, oh, that makes sense, like, good news and bad news. Unfortunately, even with bad news, when that plane crashed over in Iran, what do you think happened to Boeing stock? Because it was a Boeing plane. Boeing's share price went down.
Yep.
So if you were somebody who happened to be watching, you could short Boeing, you could buy some put options on Boeing, whatever the case may be. Or if you felt like it was going to eventually blow over, which it did, especially when we found out that it wasn't a plane issue, it was that they were shot down. Once that happened, what happened to the stock price of Boeing? It went right back up. So that could have been an opportunity for you to get in and say, okay, well, the stock has dropped and this would be a good entry point, so I'll get in. But just watching the news gives you ideas of what you could invest in. And seeing what's
Yep.
happening in popular culture gives you ideas of what you can invest in. And so I see a couple of book recommendations that have come in the comments. So you guys check and scroll through in the comments and see some of those. And then David and I are going to put some book recommendations out there as well later on for some things that we've taken a look at and give some additional recommendations in terms of brokerages and all that stuff. But take a look around there and see in the comments what's going on. And if you're hearing some information that's been helpful, throw a little thumbs up in the comments. If you're seeing something, if you heard something today that you haven't heard before, information that you did not know about investing, drop a little heart. If we are inspiring you to get into the market and to open your account or to finally start trading in that Robinhood account that you opened, go ahead and drop a little $sign. Like if you're about to put some money in the market, then we would be really happy to know it. So please let us know and give us feedback and keep asking questions down there. So this is good. So I have another question for you, David. Okay. So you don't think it's hard. You do check your account pretty regularly, but it's just because you like to see that green, you like to see the money is growing. So it's not something where you're trading every day. So you are what we would call like a passive investor or a buy and hold investor. So you're not in and out, you're buying it and then you're letting it grow. Okay.
100%.
I like that because
Warren
a lot
Buffett
of people
method.
have jobs where they can't be watching it all the time. So that can be another intimidating factor that people feel like, well, I can't be watching it, so how am I going to? No, you don't have to. You can just let it sit. So that's awesome. So for some of the people in the group who don't have that finance background, do they need to take a class? Do they need to take a course? What sort of education would you recommend? Aside from what you've already said, I know that you've said books. And you watch something on YouTube. Is that what you'd recommend? Or is there like a more robust level of education they need to get started?
I don't think it's any real robust amount of education that they need. It's just a matter of you have to want to do it, so you want to learn about it. Like when I first got started, it became like an obsession at this point. Like I'm always reading different things on, let me look at this company, see this. I'm looking around, oh, there's a stock right there. There's a stock
it's
there. Let me just
everywhere
look them up, see what they're doing, right? So just do the research on books or, like I said, YouTube, and then get on Investopedia, sign up for their simulator, and just dive right into it, and then just watch what happens over a month or so. If you don't want to wait that long, then it's like we can go ahead with your own money. But to minimize your risk, you can go ahead and start with the fake money. But it's really all, to me, when it comes to buying and holding, is just getting in, letting the stuff sit, and watch it do what it does, and just read. Don't be afraid to read. That's the thing. I didn't like reading as a kid to a teenager, but now that I'm an adult, reading has become like one of the best parts of my life. And then I was going to even put up something where I said I used to think money was power, but now it's like I really understand how knowledge is power, because once you understand the knowledge on how to make money and make things happen, that gives you power right there.
Absolutely.
So I get it now.
You better preach. Somebody pass the collection plate. Even up here on
right.
the pulpit.
Yeah, let me go ahead and start my own church.
So knowledge is power. And knowledge, being able to understand the terminology. So a couple of people have mentioned that. Being able to understand the terminology and not getting overwhelmed by the terms. If somebody starts talking to you about the dividend yields and what's the ROI, and have you checked their EBITDA because they have a highly levered and their current ratio, like those numbers, I mean, those words and terms can kind of make you feel like, oh, no. But once you start reading, it's not rocket science. It's not. And a lot of that is just very easy to understand. And if you don't understand it, there is always Google. There is always something. There are people like you and I that people can reach out to and say, hey, I read this. I'm not quite sure. Here's the take I have on it. What do you think? I'm pretty sure both of our DMs are open to that sort of commentary and those sort of questions.
Definitely.
So if you have the mindset to get started.
I was going to say, even with that, though, like, never feel ashamed to have to go to Google to look something up. Like, never feel ashamed about that. Like, if you don't know something, pause the video. Even if you're talking to somebody, I'll ask them, well, hang on 1 second, what did you say? Or if they don't even, if I don't want to do that, I'll hop on Google real quick and just see, oh, okay, now I know what that means. Now I know how to respond to it and learn the stuff, because everybody has to learn somehow. Don't let that stop you, the big words and all of that stuff. A lot of times it's just something simple that's just ROI, return on investment. Literally, like, that's all it means. What's your return on investment? What do I get for investing in you? Simple.
Yeah, it's simple. It's simple, and it's something that we make big in our heads sometimes, but it's not that hard. My most successful investments have been just kind of common sense investments. This is what I think it is. Common sense, just look around, see what's happening around you, and then taking the time to, do the reading. You know, when companies come out with their reports to explain how much money they've made over the past quarter, what their projections are for the coming year, that sort of thing. You can just read it. There are graphs and charts that you might
or the calls,
or listen on the calls. If you own the stock, and even a lot of times if you don't own the stock, if you are watching a stock, Robinhood will tell you Netflix is having their investor call this morning. Click here to sign in, and you can just listen. And listening to those calls, I've listened to my fair share of investor calls. they give you good information, and it helps you figure out what questions you need to be asking for the next thing you invest in, or even for that thing that you're already in now. You can know that, like, if this is happening, if the price of jet fuel is going up, you can remember from your call, I was on the Southwest call, and I remember for Southwest Airlines that the cost of jet fuel is 20% of their cost of operation. So yeah, if jet fuel is going up, then I can tell that probably that's going to affect Southwest in a negative way, because it's going to make it more expensive for Southwest to do business. Things like that happen when you are actually paying attention and listening to those calls, reading those summaries in the reports, and getting a knowledge of that company. Now, you don't have to do it for 25, 45 different companies. Like Warren Buffett probably knows the balance sheet and income statement for about 700 companies, but you ain't got to do all that. You can just focus on your 5, focus on your 6, and get very familiar with how those companies work, what the mechanics are for that company, what affects the stock price, and then go from there. You don't have to be the master of all. It's master of a few. And so David just dropped his Instagram handle. I'll see if I can pin that just so you all can see it. So that's his Instagram handle. He's a music producer who's an investor. So he does both. So if you're trying to learn how to make some beats or make some money, holler at my boy. He's right there. So go follow him and see what he has to say. And we're going to be talking a little later about an offering that we're going to be doing together to keep this conversation going. But I'll let that come out a little later. So you've given me some great information. If I want to get started today and I say, all right, I got $500 to invest in the market. Cool. I've opened my Robinhood account. I'm doing this. By next week, will I be a millionaire? Is that how that works?
Nope.
No.
Not at all.
I can't flip the money. I can't tell you how many times people come to my inbox like, yo, I need to flip this 1,000. What's good? And I'm like, I don't know how to flip your money for you. I can help you invest it. But this isn't an overnight process. So give us some idea of what we should expect for returns and time frame.
If you were to invest $1,000, just be well aware that the very next day after you invest, it could go down to like $950 or something, even $900. But it could go up, and don't get too excited when it goes up, because it's just a roller coaster the whole way through. And for me, it's been a gradual build up. So which means the longer I have the money invested, the more it will build up. That's the reason why I didn't get into day trading, because I think I did try swing trading before, because I was thinking like that, like, oh, if I sell this in 2 days, it went up. But I mean, I'm only making at that point maybe $10, something crazy, something small like that, like nothing crazy. And I'm like, the times that I'm pulling in and out of it, I'm realizing that if I just stay in there, it will just grow on its own. So I feel like that's, for me, the best way to go about it. And then I look at the percentages, like the fact that I've doubled my money maybe in 2 years. You might say, dang, it took 2 years, but had you invested, $10,000, now it's worth 20,000. You didn't do anything but put the money there. You parked it, and it worked its own way, and now you got that money doubled at that point. And if you're just consistent with it, over time, with your consistency, compounding interest and all that, you'll be good to go.
And we haven't even mentioned dividends. We're talking about money just sitting there in the company, increasing in value, but we haven't even spoken about dividends. So I think that just having your money there, and then every quarter getting paid 25 cents per share that you own, 40 cents per share that you own, that's another way that people are making money. Just buying it, letting it sit, letting the company increase in value, but also getting paid out those dividends. It doesn't take a rocket science to do that, but it does take time, because you get those dividends every quarter. So you have to be willing to let your money sit, and to not, fall over and die if you see that you've lost $100 of the 1,000 that you invested. Maybe it's 10%. Give it some time. And we're talking in terms of years, months, yes, but also years for how much time it will take for your investment to mature. So this isn't something where if the light bill is due on the 25th, okay, I'm not telling you on the 12th that you need to buy some shares of Amazon and it's gonna, help you pay your light bill. Like, that's not what it is. We're talking long term. We're talking
Right.
about spending months, years invested and letting it grow without the mentality that I'm going to get rich overnight, because that's just not how it works. That's not how it works. There are very few things that you can do to get rich overnight. Options, which is something I'm also in and that I teach, is very lucrative, and you can make insane amounts of money very quickly, but you can also lose insane amounts of money very quickly. So this investing in stock and holding long term is a much more low risk avenue
Right.
to grow wealth, to store the value that you have and to grow wealth. So I think that there's room in your portfolio. When I say portfolio, I'm talking about the totality of things you invest in. I think there's room for things like options where you can make money quickly, but I think there's also room for long-term investments. And then there's room for real estate. So you can be putting 20% into options, 40% into long-term investing in stock, 15% into real estate, another 15% into bonds. Like, there are different ways. And then, so Brandon just mentioned bonds as I was saying it out of my mouth. That's another factor. And these are things that I'm not saying to overwhelm you to be like, oh God, I have to get invested in 8 different things. No, I'm saying that there's a way to divide the money that you have, your investable assets, so that you're not putting too much risk in in one basket. But just overall, getting started is the first thing. Just get started. Just open your Robinhood account. And I took out the link that was in my bio for Robinhood account. But if you are interested in opening a brokerage account with Robinhood, the only reason I'm even plugging that is because when you open the account, you get a free share for opening, and we get a free share for recommending it. So if any of y'all don't have a brokerage account, hit up David, hit me up in the inbox, and we'll send you our link. But yeah, it's just a matter of understanding that it's not going to happen overnight, and that you will take some losses, and that the losses are paper. They're fake until you actually sell.
I'll say this: if you want to make money overnight with this stuff, you have to invest a lot of money. Like, you got to be willing to throw in like $1 million and then see that change the next day, and then you making money then if you playing with that type of money. But
Yeah,
just the
you're
average
playing with
person,
a lot of money.
don't
Absolutely.
expect it.
Yeah, you can definitely, if you have 1 million shares of something, and the price on that share changes even by 25 cents, all of a sudden you are cashed out. Okay,
Yep.
but
Yep.
if you have $1 million, you're probably smart enough to not risk it all on something like that.
Exactly.
So, but yeah, I think that makes a lot of sense. Okay, so I'm really excited about this conversation. So far we see that it's pretty easy, pretty straightforward. You've done your own research without having to do an insane amount of research to the point where you're getting, your PhD in investing in stock. Just common sense sort of stuff. Dayton, hey, he just joined the party. And so, yeah, how much would you say people need to get started? Their first trade. Should I take 10 grand out of my savings account? Should I, not pay the rent this morning so I can put this month so I can put 1,800 into it? Like, what do I get started? What's the reasonable amount to get started with? And while you're talking, I'm just going to run over to my bookshelf and see if I can find some of the books that I would recommend. So talking, I'll be right back.
All right. So for me, I would say it really depends on where you're at currently. You know your financial situation better than anybody. As she said, I wouldn't recommend anybody not pay any of their bills to, start investing, because you need to make sure you have the basic necessities of life. So from there, I mean, there's different levels of entry now. Like, when I started, things were not as high as they are now. Like, a lot of shares, you got to have a decent amount of money to start getting like shares with, like Apple and all of that. So there are places that offer you fractional shares where you can buy pretty much based off of how much money you want to put in. So maybe you don't have, like, let me get a real price right now so I can be very accurate. Like, Apple right now is at $317. So if you don't have $317 to put in on Apple, but you may have like $200, you can find a brokerage that will allow you to get fractional shares and go ahead and just start, and you will still get the benefits of the ups, and you'll still get the falls if they go down and things of that nature. So that's pretty much what I would do. Like, even with Amazon is at $1,800, almost $1,900. If you have $500 to put in on it, just find a fractional share place. You still get the dividends and things of that nature. But if you are someone who has the money to play, I don't even want to say play with, if you have the money where you can risk it, then I would say go ahead and try and get whole shares. But outside of that, or maybe you want to be, maybe you only have $2,000 and you want to really, really diversify and buy smaller shares, like fractional shares of different companies. You could do that as well. So look at your financial situation and look at the risk and be like, what happens if I lose all of this money? Now,
Mm-hmm.
for me, I haven't been in a situation where I lost all my money, but I have took some losses. So you just have to really balance it out with yourself and look at your account and make sure you do pay your bills because you need that. Invest with
That's
the extra
real.
money.
That's real. So I think I have one of the books that Abiodun just mentioned, Reminiscent of a Stock Operator. That's one of the books that you can read. That's pretty good. And, you know, if you don't get this screenshot right now, it's fine. I'm going to put up some more links later on. And then here's another one, The Alchemy of Finance by George Soros. There's a difference between really trying to learn finance versus trying to just find some place to put your money. So you don't necessarily have to know the entire history of the stock market. You don't have to necessarily understand every detail of all of how I think you do need to understand how the New York Stock Exchange works, but there are certain details that you don't need to know to just get started. If you have some curiosity about finance, then I definitely have some books for you. But if you just want to get started, there's like, I think, what are those books that they have, like a series of An Idiot's Guide to such and such, like The Fool's Guide to
It's like investing for dummies and stuff like
Investing
that.
for Dummies. That's what it is. They have Investing for Dummies. They have one of those For Dummies books related to that. So there definitely is a difference between trying to learn the technicals of how investing works and how the stock market works and all that versus just like, how do I buy this and how do I make sure that if I buy one share of IBM, I'm not going to be broke tomorrow? Or should I buy IBM versus Microsoft? Like, there's a ton of resources to help you figure out that basic stuff. But if you really want to get into like the more detailed sort of things, there's another one, like A Day in the Life of a Stock Operator or a Stock Trader. I'm forgetting the name of it, but there's a couple others. So follow up on it. I'll follow up with you guys on that, the name of some of those books. But yeah, I think that we've given you a lot of details for ways to get started at this point. I had a couple more questions. So as far as your expectations, you should expect to lose money sometimes, but you should kind of just get over that and hold out for the long term. Yes. Fractional shares. Can you get into that fractional share part just a little bit more? So where could we go if we want to get fractional shares, and what does that mean exactly?
There's a few different brokerages, but the one that I've used myself personally is Cash App, just to really test it out, like literally just to see what happens. So I took $5 and I put it in on, split it between Disney and I think it was Shopify. I was looking for my phone on my phone. I was going to get the actual numbers, but so I just literally took $5, and even with that, I could see like, oh, it went up 15, 20 cents. So it's like with $5. So you can take little things like as a business, or even if you have a Cash App without even being a business, when people send stuff over to me via Cash App, I will leave a small percentage in there to specifically invest with the fractional shares
Absolutely.
because, as I said before, Amazon is almost at $1,900. Me right now, I don't have $1,900 to just put on Amazon, so
Put it
maybe I
in
have
one
a
side,
thousand
that's a lot.
dollars.
Yeah.
Yep. So maybe I'll just be like, oh, I'll put this 1,000 on there, and I still have a piece of it. And as you continually build up on it, it will eventually become a whole share. And I see
Right.
where Kyle said Charles Schwab has fractional shares soon, or will have it soon. And I'm hoping like TD Ameritrade, Robinhood said they're supposed to have it. I think what's happening is Robinhood pretty much disrupted stuff, and now other places are trying to do
Robinhood
stuff to disrupt
disrupted stuff
everybody
like
else.
a mug. Robinhood really did disrupt things because the fact that all these brokers don't charge now for your commissions,
Hmm.
that's all Robinhood. Robinhood went up there and changed the game. But I kind of wonder if Robinhood is going to last, though, because now that all these other brokers are doing the same thing as Robinhood, that was Robinhood's competitive advantage. So I'm
Right.
thinking that Robinhood might end up just getting purchased by one of those other bigger
Yep.
brokers because
Because
there's
they
not
already
really
have a
much need
base.
for them anymore. Because
Right. And
Robinhood is cool for what it was, but now with going to the other brokers, you can still get like the research that they have available and all the charting that they have
yeah.
available, and it's just a much more full offering than what Robinhood has, simply being app based. So I think they're going to get bought out at some point. But
I
shout out
think
to them for creating the wave so that we can
I
all have cheaper access to investing in the stock market.
And that's what I was going to say. I feel like their advantage was simply that they had the young people and the everyday person just, oh, all I gotta do is download this app and it's like free and I can do this. So I think they have such a big base now where, like you said, I think they will be purchased by a bigger company at some point.
Mm-hmm. Yeah, I think they will too. So this is great. I'm so excited. So I want to talk about a little bit about what we are going to be doing next. Well, no, before I even get into that, tell me your number one favorite stock that you have invested in the past, and then your number one favorite stock that you are looking at right now.
My favorite stock, I have to say Shopify. I thought it was going to be Amazon, but I took some of my shares that I had bought of Shopify early on, and just when they went up some, I sold them. And then, no, they went up, they dropped down. I had a stop loss in, they sold. I took those shares. I bought a few more of Shopify, and then I took some of the other ones and purchased Amazon at like in between $700-800 in that range. And I'm thinking, oh, I got Amazon now. Amazon about to take off. Wish they did, because I mean it's over $1,000 from where I bought it. But had I left all those shares with Shopify, I'd have made a lot more money long term. But
Because
that's my
percentage
biggest
increase.
grower.
Yeah,
Yes,
it's the biggest grower. Yeah.
I believe
Okay.
so. But one that I'm looking at now, like I really stick to my same basis, like stuff that I have. Like I want to get more. I want to get more Apple, and I want to get to a point where I can get more not Shopify, Amazon. But Disney was my main thing when Disney Plus was coming out. I kept posting about it, saying post Disney. Disney Plus is coming out by Disney. I'm just a Disney head down to Marvel, Star Wars, all that
Mhm.
stuff. So it's like that's just a company that I feel like is very valuable long term. Like I don't see them going anywhere. Like it have to be really bad for Disney to go somewhere. So
Right.
that's like my favorite. And yeah, those are my tops right there. And I can
Okay,
give you
that's
my
what's
worst
up.
if you want that, because I
Oh,
thought I was
please
being
do. That's
smart.
the other side of it. It's not all cupcakes and roses and unicorns. There is the other side. So what was your
Yep.
worst investment? And while you're thinking of that, let me tell you my favorite. So Square, I already shared with you guys. I got in at 9 and I sold at 100. So that was pretty dope for me for Square. But one of my ones that I'm proud of that happened more recently was Visa. Visa, that was another one of those kind of common sense things. At the time when I got into Visa, I was looking around and I'm like, as much as I'm a proponent of becoming debt free, people still use their credit cards all the time. And so Airbnb had a Visa credit card, Starbucks has a Visa credit card, this company has a Visa credit card, that everybody had Visa credit cards. It's figured, okay, well, Visa must be doing something right. So let me get into Visa. And when I invested in the stock, it was only at $90. But by the time I sold it, I think I got the stock and then I got the options on top of that because the stock did so well. So the stock maybe went up 20% while the time I owned it. The option went up 128%. And then the stock between 2017 when I got it and now, it's already at $195 the last I checked. So buying it at $90 just because I looked around and saw everybody had it at the end of 2017, it's more than doubled 2 years later, 2 years and some change. So that just goes to show that picking something that makes sense, that's just kind of common sense, and giving it time to grow just makes you money. Somebody just mentioned about the coronavirus. That's something we've been talking about in my chat. So I have a WhatsApp group called Steph Trades, and we talk about how to trade the news, trade information. And like I said earlier, you can trade things that are good, and unfortunately, you can still make money off of things that are negative that are happening. So with the coronavirus, there are pharmaceutical companies that are poised to put out a vaccine for it. There are medical device companies. There are people who are creating those masks that cover your face. Okay, they're making money right now. So it's unfortunate and it's sad that people are dying, but there are investments to be made at every turn if you know how to apply the news to your brokerage account. But yeah, so just wanted to throw that in there for me. My best so far was probably Square, but Visa more recently. Visa, MasterCard, Discover, all of those debt companies, those credit card companies, great investments. But so tell us your words then real quick, David.
Are you familiar with you remember Movie Pass?
Oh my
Yeah.
God, Movie Pass. That shit show.
So
Yeah, I know Movie Pass.
so I used Movie Pass. I loved it. So I was
I'm
like,
sure
this
you
is my
did.
thing. I went and I looked up like the shares and I saw how much they were trading for, and I'm like, wow, like their what is it? Parent company was going for like $1,000 at one point a share. So when they were on their way out and they were dropping, I bought 500 shares for like some low money, like probably about $40. So it ain't that big of a loss, but it was just
Okay.
I'm thinking about outsmarting everything. Like when I'm smart, see what's gonna happen is it's gonna drop and it's gonna bounce all the way back up. So I
Uh-huh.
got 500 shares. So even if it goes up to $1, I'd have made more money off of it. Man, I'm looking at this thing. This thing ain't went up. Ain't went up since. I don't know if it's ever coming back to life.
It's
I said I'll
never
keep
coming
it.
back, bro.
I said
The
I'll
concept is
keep the
flawed.
shares just in case. I'll keep it just in case because it's only 40. That's the thing. That $40 out of blue on something else, probably
No,
just eating
absolutely.
food. So it's like whatever. But now if it does go back up to that 1,000, one day.
Right, right. If it does go
But yeah,
back up, you
that was
watch.
my
But for
worst.
that one, that just the business model itself was flawed because it just how are you really gonna make money through this? What they
Right.
were doing. But that's why you buy things that you already know, buy things that you're already interested in. For that, it did make sense that you would want to buy something new because you were like, oh, I'm using it, other people are too. But just the fundamentals of how the company itself would make money didn't make sense. But I'm not worried about the fundamentals of Walmart or Target or Chipotle. I
Right.
know they're here, they're gonna stay, so I can put my little $100 every pay period, $200 every pay period, whatever, into those and feel confident that my money will continue to grow and outpace inflation as opposed to me spending it on bundles of weave or on Hennessy at the club or me putting it in a savings account because
Right.
those are pretty much the same thing. You're not getting anything from it. Um, so one of my worst ones, let me think. I've had a couple of bad trades. I'll tell you about a bad trade that it was only bad because I didn't do it. When I was in college in '08, I wanted to buy the banks when the banks were down. Bank of America was at like $1 and change. Citigroup was under $1.
Wow.
And I was talking to somebody about it. I was like, yo, me and my little finance in School of Business at Howard University is full of little miniature bankers. We all think we are the stuff. We all think we're brilliant and we're going to be like the biggest and baddest in finance, which I mean, honestly, we are. But anyway, that's a whole nother story. I was talking to one of my friends about, how I wanted my portfolio to grow and how I was considering buying these banks to add to my portfolio. And he was like, oh, no, that's a bad idea. Citigroup's going to go under, blah, blah, blah. And I'm like, yo, but Citigroup is pretty big. Like, I don't know if they're going to go under. I think that the price is really low, but what's the worst I can do? Like, even if I buy, 100 shares, I'm only going to be losing $100 if this doesn't work out. But I trusted him more than I trusted myself. And I didn't buy it. And now Citigroup is at like 60 some dollars or more. And I kick myself every time I think about it. But it was a valuable lesson for me when it came to investing about trusting myself. Hearing other people's information and filtering it through, but at the end of the day, making my own decision because I made that decision 100% based on what he said because I trusted him more than myself. And now, if I had bought those shit $1 for Citigroup and now it's at 60, what? 60,
It's 78.18.
I could have handled 60, but 78 I can't handle. No, but so you see the point. You do have to get comfortable with trusting your instincts, asking questions, but at the end of the day, making the decision yourself. So that was the worst for me that I didn't make that trade. But beyond that, I actually don't have very many trades that have gone wrong. If anything, I'll get out too early. So AMD was one that I got out too early on. I got out for a loss, but then it ended up taking off. So I would say AMD. That was the worst for me, but the company itself and the stock has been pretty good.
Right.
Yeah. Yeah. But so we only have a few minutes left before this live is going to end. So I wanted to talk briefly about a question I had for you. So I wanted to ask what your top 5 stocks are, if you're cool sharing that.
Pretty much gave them out already. I would say Apple because Apple is technology. You have Disney just off of pure value. Shopify because it's a big not marketing tool. It's a big tool used in my market for selling your own things.
Mm-hmm.
Okay, let me go to my portfolio real quick because I can't think of any more off the top of my head right
No,
now.
that's fine. We only have a few minutes left, so that's good. Just something for the people, a little sprinkle for them to have to take away from this. That's your gifts to some companies that David's investing in that you might be able to make some money off of too. But going forward, I know we weren't able to answer many of the questions that you guys posed because this conversation was going, but this is something that David and I are going to keep doing. So we've decided that we would like to do this on a monthly basis, to have conversations with people about how to get started with investing, buy and hold strategy, to answer your questions and kind of demystify investing in the stock market. So on an ongoing basis, once a month, we are going to sit and talk to you guys for an hour and a half, go over topics that we've already decided we want to share with you, and then answer your own questions in a webinar series that we're going to do. So very excited about that. And it's just going to be a monthly call, the basics of investing in the stock market for beginners. So you'll be able to talk to both of us once a month, 90 minutes or more, depending on, how the conversation goes. And it's going to be $25 to join into that call once a month. So both of us have links where you can go into a Google Sheet and sign up, give us your name and information. And then at some point in the next couple of weeks, we'll get back. Well, probably in the next 1 week, we'll get back to you about what the topic will be for the next session. So it's going to be on February 15th. So that is the morning of the day after Valentine's Day. So wipe the crust out your eye and get up, because we will be talking and sharing with you guys some more information, walking you through step by step, if you feel intimidated about the process, step by step on how to open your account, what to look for, which books we're reading, what resources you should use, which magazines, all of that, to help you grow and maintain your portfolio. So don't worry. David just pinned the link that you can click on to get signed up for our monthly talk. And I'm so grateful for your time, David. If you guys appreciate it,
No, this is great.
had a good time, let us know. Drop an emoji, my fave. Give us a little thumbs up, because there's more on the way. David, do you have any parting words, anything else you'd like to leave the people with?
I appreciate all you guys for tuning in. I appreciate you having me. This was fun. This is a new way for me to give out this knowledge, because I feel like it's very important. Like, I went to my old high school last year, it was 2019, last year, to do a talent show, like to watch and judge and stuff. So it had me coming back. And one of the things that I think is interesting is when they sit there and after they perform, like, yeah, I'm trying to be a millionaire and all this. And I'll be telling them about passive income, go get you some investments, do that stuff. So, because I feel like it's important to plant those seeds. So this is another way just to get that out there. So I'm grateful for you even reaching out to me, because like I said, I'm like, oh, I mean, yeah, I've made some money doing it and I know how to do it, but I'm not the person that's sitting there with all the computers and all day.
You don't have to have all that. You absolutely don't have to. And this conversation, I think, proves that to everybody. You don't have to to make good returns. So that's awesome. And I definitely didn't do all that when I was making my returns, just investing in stock either. So it's just a matter of having the mindset and doing it. But we will help you if you like help getting that mindset or taking that first step. That's what David and I are going to be doing, walking you through, helping you understand the basics, demystifying it, giving you the terms, the resources, and all that jazz. So we are about out of time. Thank you so much for joining us, everyone. Appreciate it. Thanks for all of David's followers who joined us and mine here in Houston. So thank you, and take care. Enjoy the rest of your Saturday.
All right. Talk to you later.
Yes. Bye.
Bye-bye.